So the third type of special journal is called cash receipts journal, and if you're following with us, it's page 439. This will be another really quick one, and we're going to talk about recording cash received in cash receipts journal, and we're going to talk about how to balance and post the cash receipts journal as well. So here, figure 923, so if you're in your textbook, it's going to look like this. Shows a cash receipts journal with 6 money columns. There are debit columns for cash, sales discounts, and credit columns for accounts receivable, sales, and HST payable. There's also an other account credit column that is used to record credits to any account for which a column is not provided. Most transactions require only one line. However, on occasion, compound transactions require 2 lines. When the other account column is used, the name of the account must be shown in the customer or account column. Similarly, the customer's name must be shown when an entry is made in the accounts receivable column. Additional columns may be added to the journal if a particular account is used frequently. The cash receipts journal is totaled and balanced at the bottom of each journal page and at the end of the month as shown in figure 923. The procedure followed in balancing and posting is the same as the procedure for the sales or the purchases journals. Okay, so if you want, these are your steps to follow here when you're posting at the end of the month. Okay, so we're going to go through different kinds of documents or receipts that you would see, and then we're going to refer back to here, showing us how they were recorded. Cash receipts for customers. Documents for 2 transactions that involve cash received from customers are shown and recorded. Check received for payment on account. A credit sale was made by Pan Canadian Sports Equipment to the High School of Commerce on October 15th. The terms of the sales were net 30 days. This means that Pan Canadian Sports Equipment should receive a check by November 14th, 30 days from the invoice date. The check received by Pan Canadian Sports Equipment is shown in the next figure. Notice that this check is different from the personal checks used by most individuals. It is called a voucher check and contains 2 parts. The first part is the check, and the second part is the attached statement describing the purpose of the payment. Okay, so that's what that would look like there. And it just gives you a better copy for your accounting program. When the check is received, it's recorded in the cash receipts journal as shown, and cash is debited by $67.80 and the customer's account is decreased by a credit of $67.80. So if we flip back to there, that's this one right here. So you'll see that there's a cash debit of $67.80 and the accounts receivable credit to $67.80, and you need to have who the customer is there. You've learned that sellers offer discounts to customers to encourage early payment of an account balance. When sales are being made, the buyer and seller agree on a payment term. When the final details of a sale have been completed, both parties should understand clearly that when and how payment is to be made. Payment terms should appear on the purchase invoice, the sales invoice, and the monthly statement. Any penalty for late payment should also be clearly outlined on the sales document. So we'll flip back to this, but it says it shows how the receipts of a check for payment of sales invoice 108 less a sales discount is recorded in the cash receipts journal. On November 14th, a customer paid $601.40, which represented a payment of $620 less $1860, and that was found by taking, they were giving a 3% discount, and that's how that was figured out there. So if we look back to here, you will see that you've got the cash debit of $601 with the sales discount of $1860 and the credit, accounts receivable credit to $620 with the person's name there. As well as being received from customers paying the balances in their accounts, cash is received from the following types of transactions. So there's a cash sales slip, a $25 Cash sale is made by Pan Canadian Sports, and I don't think I need to read the rest, but we'll go and look at it. So it was $25 sale plus some HST, so the cash received is $28.25, and it was simply called a cash sale. You didn't need to know who it was coming from because it was nothing that was on an account. Check received from a new investment, $2,000. So if we go back to there and look, you have the person's capital account. You're receiving $2,000, and you don't have a special column for that, so it has to go into the other. Okay, and the last one is a credit memo. The bank credit memo is a source document received when the bank adds money to a customer's account. So your cash would go up by 75, and there's an account called bank interest earned would be credited 75. And if we go back and have a look, you'll see here that you have a debit of 75, and you don't have an account for it, so it has to go to the other, and the account you're putting it into is your bank interest earned. Okay, so I think I've covered everything there, and then just remember to go back and have a look at how things are, making sure your debits equal your credits. Things are underlined, double underlined, and then your totals of these special columns, what account numbers they're going to, that those totals being posted to. Anything that is going to a special account has to have the account number put there to show what account the capital is and the bank interest earned is. So I hope that helps you guys.